Bitcoin isn't having a great time today, so we're gonna ask the question, how far can Bitcoin potentially dip? How far can it fall? And in order to answer this question, we are going to look at several different models, all coming from the website lookintobitcoin.com. So some of those models, they are rather optimistic, others are rather sobering. So without further ado, let's jump into it. Now, no model is perfect, right? But some models are useful in order to kind of manage the risk, try to assess risk versus reward. So let's jump into the first model. This is a model to predict potential bottoms. So how far could Bitcoin potentially drop? And this is the 200-week moving average. So in this case, we've got the heat map, meaning how far is Bitcoin currently extended from that moving average. And this is a very, very long-term chart, right? We are looking here at a chart from 2012 all the way to today, where Bitcoin was just a few dollars, to currently where it is at $46,000 roughly. And what we can see is that Bitcoin rarely was below that 4-year moving average, right? Or the 200-week moving average. It did dip below this temporarily, right? For example, here in August of 2015. But this was just very, very brief. And the idea why one might take the 200-week is simply because of the halvening, right? There's some kind of 4-year rhythm baked into the Bitcoin price. So the idea is, since the new supply gets cut in half every 4 years, we're probably not going to see much of a dip in this 4-year cycle. Some people say that the cycles, they might lengthen over time. There is some merit to this as well. But still, the 4-year or the 200-week moving average tends to be a pretty good gauge where Bitcoin might fall at its maximum. Now, where is this value right now? So our price is now 45,557 US, and this 4-year moving average is currently at 20,940. So this is still more than a 50% drop. Does it mean that we have to fall that much, right? Nobody knows. It doesn't have to necessarily be that this is just repeating. One way to simply get to this moving average is just by a prolonged sideways movement, right? So potentially we might not grow that quickly anymore. We might just go sideways for a year or two. Then also this moving average would get closer and closer to the price. So it doesn't necessarily have to mean that we have to crash, but we have to be prepared. In case it does, nobody knows, right? But in case it does, then we have to be able to take advantage of this. So you need to construct your portfolio in a way that you still have enough buffer that in case a crash happens, you can potentially buy up cheap and take then the rally that comes potentially afterwards, right? So when we had a crash here, the Corona crash to 5,000, you would then have made your 10x. But this was scary to buy during this time, right? Nobody actually wanted to buy. That's why the prices fell. Only the really strong hands, they could afford to buy. Only the people that had been prepared for this, that still had some liquidity on the sidelines, could take advantage of this. If you just bought on leverage, right, you are getting knocked out over here. You're completely outside of crypto. You're doing the exact opposite that you should do during times like this. And so simply work with the volatility, take it to your advantage, that in case something like this happens, that you are properly set up for this. Now, this is a rather pessimistic view, right? So why would you buy now if Bitcoin could potentially still drop more than 50%? And that's because over the very long term, Bitcoin does appreciate. And there are several models that show us this, or that try to give an explanation for this. One very popular model is the stock to flow model. So this models the Bitcoin price based on its supply. So as said, Bitcoin supply get cut in half every 4 years, right? So less and less Bitcoin enters the market. The inflation rate of Bitcoin goes down over time, meaning that when the fiat inflation rate is higher than Bitcoin's inflation rate, that means in the end that Bitcoin should, in theory, gain against fiat, right, over the long term. Now, this is one model that did some kind of a cross asset analysis versus precious metals. So when you look at silver, when you look at gold, etc., you look at how much of that commodity gets mined every year and how high is the market cap of that commodity. And when you make this kind of a cross asset analysis and then try to find out, okay, with the current issuance of Bitcoin or with the future issuance of Bitcoin after a halvening, what should in theory be its market cap? And based on that market cap, what should be the price per Bitcoin? That's the underlying idea here. So this only takes into account the supply. It doesn't look at the demand at all. It basically assumes that the demand will follow this scarce supply, the scarce asset. And with that model, which worked somewhat okay in the past, right, we did have quite large deviations from this. But with that model, we would now be at a fair price of around 70K, and it would then shoot up after the next halvening all the way to 700K. Okay, so that's the idea. Obviously, this cannot go on forever, because at some point in time, when this 10x's almost every 4 years, the price will simply be so high that demand can't keep up anymore. So this model has to break at some point. This simply takes into account that the new issuance of Bitcoin will be comparative to where gold is. And so this is what the proponents of this model believe. 700K for Bitcoin could potentially still be on the cards. Now, what I like to look at, and I think this is a pretty good model, is the Bitcoin logarithmic growth curve. So this, again, is a very long-term chart, starting all the way where Bitcoin was just a few cents to today. And we've got a logarithmic regression here, meaning we're trying to fit a line to those prices, a curved line, and we give some buffer around that line to give us a trend channel of where Bitcoin potentially moves. And it's not perfect, right? Sometimes we are outside of this trend channels. For example, here during the Corona crash, the lower band was 7,500 roughly, but we came down all the way to 5,000. So that was 30% below the channel. Doesn't look as significant over here, but 30%, that's quite a bit, right? When you've already come down that much. Now, given this model, the current fair price is at around 72,000 US. The lower price is at around 30,700. 30% below this would put us at a absolute bottom of around 20K, right? So again, a similar kind of potential drop from 45K to 20 or 21K. That's the lowest we could potentially go according to this model. If we take this kind of an outlier into account again, the upper price over here is currently at 167,000 roughly, okay? But we haven't reached this upper band with the recent rally here in 2021. We've only reached that here during the hysteria, during the ICO boom of 2017. So one might argue maybe we are not going to get that extended anymore. Maybe we can't wait anymore until we reach that high of a price. People simply anticipate this and they think, okay, risk versus reward at this point in time here at 133 or so isn't that great anymore. And so people just anticipate this and sell earlier. That could be one possibility. The second potential issue, even though this fits all the data, right? I kind of like this model. The second potential issue is that there's still some kind of correlation between Bitcoin and the technology stocks. And when we look at the very long-term technology stock chart, Bitcoin has only been in existence when tech stocks went up. And so potentially this chart doesn't really encompass how far we could really drop if things really turn around. Let me show you what I mean. Here, this is a long-term chart of the Nasdaq, right? Of the QQQ ETF, and the Bitcoin logarithmic regression here, it starts in 2010. So that's around here. So during the entire lifetime of Bitcoin, this is the way technology stocks have moved. And if we then try to model, okay, what's the lowest it could go? We only have these kind of drops like this Corona crash as a reference. And so we might think, okay, we can't drop much further than this point over here. This, of course, assumes that the correlation of Bitcoin and the technology stocks will stay high, or they might not decouple in the future. But when we see this, right, this kind of a volatility range is not necessarily the maximum. This was here the .com crash. This was the financial crisis, so the property crash. So if something like this would happen again, and nobody knows, right? Maybe the interest rates, they get risen too much, monetary tightening will become much more significant than it currently is. Maybe we could see something like this again, right? Maybe we see a repetition of something like this financial crisis. And if something like this was to happen, I am not sure if this logarithmic growth curve can still model the price as adequately. So I very much do like this model, and I will definitely load up on Bitcoin way more once we are at 30K or 25 or even 20K. But I still will not take out a huge loan or something like this and bet all my life on this, because volatility can be very, very scary. And what we have seen in the last 10 years is definitely not representative of all of the risk that is potentially in technology investments. Now, there's one thing that I really like about the long-term outlook of Bitcoin, and that's how many people accumulate Bitcoin over the long term and not sell it. So this is a chart showing what percentage of Bitcoin is held for at least 1 year. Okay, so on the right, we've got the Bitcoin price. On the left, we've got a percentage value. This orange line over here refers to the percentage value. And this shows how much of Bitcoin's wallets haven't moved from one wallet to the next for at least 1 year. And the higher this is, the more long-term investors there are in the market, right? And the lower this is, the more short-term people are in there. And so when we look here at the price peak, a lot of short-term speculation happened. When we look at the bottoms over here, we see the percentage of Bitcoin held in long-term wallets is comparatively high, thus indicating the higher we are on this, the more likely we are going to see a price rise again, right? When a lot of the Bitcoin is just held by long-term holders, then the supply currently is relatively tight, meaning that when new demand enters the space, the price might go up, right? So here, the 1 year hodl wave is at 64%, and what came afterwards was this rally from 10K to 50 or 60K. And so the long-term holders, they sold into the rally. Currently, we are at an all-time high, I believe. Let's look at this. Yeah, this is an all-time high now. So never in history has Bitcoin been held by that many long-term investors. So that's good, right? If your time horizon is long enough and you're willing to hold through some volatility, then time is on your side. This investor base of people that simply buy and hold, it is increasing over time. More and more Bitcoin isn't used for speculation, but for long-term investment as a hedge against inflation, as a hedge against monetary debasement. Now we've got a few more interesting charts over here. If you so far enjoy this content and you're not yet subscribed, don't forget to do so, because I do publish videos regularly. And of course, a like on this video would be appreciated as well. Thank you. Now let's look at something a bit more complex. Let's look at the market value to realized value Z-score. What is this doing? So this is looking at the market value of Bitcoin, right? And it looks at something called realized value, as in when did Bitcoin move the last time from one wallet to the next? And so you divide those two numbers. You look at what's the current value, the market cap, and what's realized, as in what was the price when Bitcoin last time moved. And so when there's a lot of movement happening within the Bitcoin network, then these prices in the wallets, they get updated a lot. And so this value here gets very high. Okay, so when this is very high, a lot of short-term speculation is happening, a lot of updates of the price of this realized cap happen. Thus, we might be in euphoria state and we might want to sell. The same is true the other way around, right? When nobody is trading Bitcoin, then the market cap is relatively high to the realized value, meaning this is pretty low. And this is a pretty good gauge of buying the long-term macro cycle bottoms. And the Corona crash was in there. The final capitulation in 2018 was in here in this green area. We didn't peak to the euphoria red line again in 2021. So a lot of people thought we might go to 100K. It didn't happen at that point in time. Currently, we are at 1.3. So again, not necessarily completely at the low, right? If you want to look at the realized value, that's this orange line here. So we rarely go down with this. Let's zoom in over here. Currently, the realized cap is at 468 billion and the market cap is at 865. So again, something around a 50% decline that's potentially on the cards. Now, why would you invest now if still a 50% decline could be possible? That's simply because of the long-term increasing price, right? If we still expect Bitcoin to grow as quickly as it did in the past, which is now, if you look at the logarithmic regression, around 70% per annum, if we assume 70% per annum an increase and you're still waiting and maybe we don't see this low over here, right? Sometimes we turn around directly afterwards. Here, look at this rally that happened. We did not see us all the way to the green area. If we still see this massive rally from in this case 1 billion all the way to 13 billion. You would have completely missed out if you don't sometimes buy, even if we are not that depressed. So you can't time this perfectly. You can only roughly time this and try to find points where you potentially want to dollar cost average in versus dollar cost average out. That's at least how I personally approach this. And so since we can't do this perfectly, is this now rather a time to DCA in or DCA out? I'd argue it's probably rather time to DCA in, of course, with the option to even buy more in case we fall further. You don't want to miss the next rally in case we do turn around directly just because we haven't hit rock bottom. We might not hit rock bottom, right? It's very much possible. And so this is a pretty similar perspective on this. So this is the relative unrealized profit and loss, as in what is the market cap minus the realized cap divided by the market cap. Again, realized cap being when did Bitcoin move the last time. And this is a good point to time the bottoms. Currently, we are somewhat in the middle, not particularly expensive nor particularly cheap. So simply do whatever you do in those standard movements, in these standard situations, which I think should be dollar cost averaging. So buying regularly Bitcoin, either on the first of every month or when you see Bitcoin being particularly depressed, as it is right now. So Bitcoin just crashed quite a bit. One thing you might want to look at, for example, if you don't just want to buy on the first of every month, but if you want to time this, you might want to look at the hourly RSI for Bitcoin, which just fell below 20. So I will have the link to that strategy in the outro of this video, so you don't want to miss this in case you haven't watched that yet. There is a premium Telegram alerts channel where we see all kinds of alerts for timing the market. So we've got back tests that tell us, statistically speaking, when are good times to buy and to sell. And if you're interested in these kinds of signals, feel free to check out thebitcoinstrategy.com. Link is also in the video description. So you get these kinds of signals. You also get daily market updates on where I currently see Bitcoin, Ethereum, and various altcoins. Now zooming out again, why is Bitcoin a good long-term hold? Because other people hold it over the long term, right? This is HODL waves. So this shows us how long are people holding Bitcoin for. We can even on this website, look into bitcoin.com, segregate this, right? We can deselect different kinds of holding durations and see how long do people actually hold. And of course, a certain cohort is holding this already for more than 10 years. That Bitcoin might be already lost, right? It's unlikely that people that bought 10 years ago and never moved it, that they're still actively holding this. Then for 7 to 10 years, we've got this kind of a development. For 5 to 7 years, that kind. And if we add all of this up, right? Let's say we add all of this up from 10 years all the way to 1 year, we can see there are these cycles and we can see that this tends to increase. So another way to look at this is to just see the exact opposite, right? Let's say we go just with very short-term trading and we only look at how much of Bitcoin is held for 6 months or less. We can see that this declines over time, meaning that less and less money is just short-term speculation in Bitcoin. It's rather the other way around. People simply hold Bitcoin over the long term. And that's exactly what you want, right? You want to buy into an investment that people don't just short-term speculate and that might come completely out of favor in a few years. You want to buy something that has a bright future long-term. And this, in my opinion, indicates exactly that. People hold it long-term, they don't trade it. If you're already owning at least one Bitcoin, then this is the chart for you as well. This shows how many wallets there are currently holding at least one Bitcoin. And this was relatively low in the early days. And that's not necessarily because of the Bitcoin issuance, right? Of course, there were less Bitcoin around during this time, but the main driver for this is simply Bitcoin getting into the hands of more people. It's not growing as quickly anymore, right? So there was quite a bit of a slowdown after the crash of 2018, but still we are now at an all-time high. So never has there been so many addresses with at least one Bitcoin. And I think this should be a target of a lot of people, right? To have at least one Bitcoin, because as we've seen in a lot of other charts, it's not completely unreasonable to assume that at some point in time, Bitcoin might be worth, say, $500,000 US or so. The stock to flow model predicts this. Logarithmic regression says this might happen. And a lot of long-term holder data also suggests this. Bitcoin is not actively traded anymore. It's more and more held long-term, drying up the supply even more, right? So it's not just a reduced supply by the algorithm, it's also reduced supply because of long-term holders that simply don't sell. Now, if you're interested how to mentally approach all of this, right? How to set up your dollar cost averaging, how to get in and out of the market, how to construct a portfolio. There are mindset and strategy videos for the premium membership. There's also even a dedicated course on technical analysis, on technical indicators, on analyzing data. So as said, the link is in the video description. The current monthly rate is $49 because we are not in a bull market. So I did reduce the price. You will lock in this rate though, right? So even if the price then increases for new signups, you will stay at the 49. Or alternatively, if you decide to sign up yearly, you do get 2 months for free. Now, as said, there's a way to time the Bitcoin market properly, to not just buy on the first of every month, but to buy when Bitcoin is especially depressed. So the video over here will explain all of this. There's a lot of value over there. Don't miss that video. See you there, and thanks for watching this one. Bye-bye.